Wednesday Intra-Day live webinar with me, Gil, and Dr. K. You're on the line there.
How's it going?
Going well. The market's moving up pretty good. Are we on a buy signal yet, or what are we waiting for here?
Well,
What's
we're on
your
the
take?
verge of one. This market has been. It gets to that point where you want to buy, and then it stops going higher, and then vice versa on the sell side. So the leading stocks are looking pretty good. They're starting to look good, and so the model is just on the brink here, going to a buy signal, despite being oversold in the markets and having come straight up off the bottom, which is often not the best kind of action you want to see. The leading stocks are doing well, but all things considered, I would still have liked to have seen more performance given the performance of the indexes.
Yeah, I think, though, you can play the market on a stock-by-stock basis. I mean, there are some stocks showing some very good buy points, I think, right now. But if we look at the market here, as I see it, all this thing did is consolidate for a little bit yesterday, and then today we were down a little bit. The Portugal news came out, and the market did not want to go down, which I thought was very interesting. It seems to tell you that what you have going on here now is this kind of like QE, Euro QE coming in here now and starting to have some sort of effect, because I noticed the precious metals are going up. But it looks like you're above the 50-day now, so I would think any pullback down to the 50-day would have to be watched as to see whether the market breaks down on some volume or whether we continue higher. But it's pretty amazing. I mean, look at this rally here. 1, 2, 3, 4, 5, 6, 7 days straight up. So I'm sure a lot of people are sitting back on their haunches wondering, when they should come in here. And if you're not already in, then you're sitting back waiting, wondering where to come in. But I think there are some stocks that are showing some entry points, and there's some interesting action here. But just the indexes, you can see, I mean, it's kind of obvious that the market is rocking and things are moving pretty sharply today on the upside as far as the indexes go, following yesterday's spin out after the Portugal news. So I think that's kind of interesting.
Yeah, we're in a good period of strength here, and certainly bad news can't seem to derail the market. And so on that level, that's another feather in the cap for a buy signal that the model is very close to being to generating here. Mm-hmm. And what's nice is that when you play the market as a market of stocks, you can still participate in profits. I don't know how many positions you're long. I know you're long a few. I'm long.
Right.
4 positions right now and looking to pyramid into each one if they can prove out on a price basis. Because it's a very challenging market, because the market really hasn't sustained any up or down trends all year, it's good to go in with small positions, and if the market decides it wants to head south again, you're going to lose very little. But if, let's say, the market continues to go higher, defying expectations, then you're at least sitting in your positions to which you can add to and participate in the uptrend.
Yeah, so it looks like you could play it on a stock-by-stock basis, and that's how I would approach it. I don't think you need to see the market direction model necessarily give you a buy signal to go hog wild. I think you just come in and play it on a stock-by-stock basis, and in some cases I think you do pretty well. So let's just go through what's going on today and what we're seeing, and then we'll get to some questions. As far as individual stocks go, I think the cloud computing area is coming back to life here in a big way, and one of the things we're seeing this morning is VMware coming up to the $100 price level. Now you notice back here VMware failed, and it looked like it might be a late-stage failed base, but stock basically found support down along the 90 level, which it had before, and then turned around. This one reminds me of Baidu in 2006. Let me go back in time here and just show you what happened way back then. I remember this because I was playing it, and it was kind of a strange maneuver. Here it is right here. So here you have the stock. It was in this base, and it broken down here, came back up, got nice and tight in here, and then broke out here. And then earnings came out, stock broke down hard, hit the 50-day moving average, turned around and went to new highs. And that's an example, I think, of basically where you see a late stage, or you think you see a late stage failed base, but the stock finds support, turns around and goes higher, and then you're off to the races. So VMware now coming up to the 100 level, you're at 103.31, so you came up right up 100 this morning. And stock looks pretty good. You could invoke the Livermore Century rule here by coming in, taking a position using 100 as your downside stop, and then looking for the thing to start to move to the upside pretty quickly, getting to 110. That was a similar situation we saw with Biogen last week, and it came right up to the 100 level finally after messing around. And you can see VMware did the same thing, kind of messes around the 100 level before it finally does decisively go through. So I think that you might see the stock move higher from here as long as the market trend starts to develop, which it seems to be doing. So it's not like you need to feel like you need to see a buy signal on the market direction model to start nibbling at some stocks and taking positions that you can pyramid if they continue to work. And like Dr. Tay said, if your exposure is pretty well thought out, then you're not really going to get clobbered if things don't work out. I mean, myself, I'm only playing with a third of the money that I would normally use in the stock market, so I'm just messing around with one smaller account and not coming in too heavy. But that might tell you that we're going to go off on a big tear to the upside here. But we'll see what happens. I think it's all kind of in play right now, and there's some stocks to buy. So VMware being one of them. I also noticed CRM, Salesforce.com is breaking out to a new high today. I think. Let me check the volume level. What's the volume level running on that one this morning? 16% above average. So you're getting some above average volume right now, and it's making a new high. And in fact, this is an all-time high for Salesforce.com. Surprise, surprise. But I think the stock probably is going to go higher. And I think the fact that they bought Radian6, which is a social networking company that caters to business, in other words, integrating business products and business lines with customer service with the whole social networking thing. I think that's this is definitely a name to be looking at. Now, along with Tibco, this is what I find really bizarre about this market to some extent. You've seen a lot of names that look like garbage by the middle of June, and you wouldn't touch them with a 10-foot pole. And look at Tibco today, breaking out to an all-time high. Volume is running about, looks like, let's see here. See how long this takes to come up. Dr. K, what are you seeing on the volume on Tibco? Okay, 11% below average. So not huge volume, but it just continues to move higher. And now I have these little ants here. This is an EFS file off of eSignal, and for those of you who use eSignal, you can download the file from the website. I think we have it on there. But you can see these little ants, as we call them, these little triangles, tell you the stock's up 12 out of 15 days in a row or better. And so that's a very powerful move. A lot of times a V-shaped move like this, I would consider it very suspect. But the odd thing here is you're seeing a lot of power on these moves, and they're just jetting to the upside. And this is very odd in terms of being action that you really wouldn't want to step into. But it's telling you there's some powerful moves in this space right now. And I think when you start to look at some of these other names, like VMware, for example, they're right at a breakout point. I think you can kind of assess that you have some group strength that you can buy into. So it doesn't really look like this would be, for example, all that dangerous to come into. So I also noticed today F5 is moving sharply to the upside, and it's coming back above its 50-day moving average, and it's doing a similar sort of thing. So it's a little bit confusing, but I do think you can come in and take some positions on this basis and buy some of these stocks that are actually breaking out. I think I would tend to favor VMware over most of the other names because of the volume and the two pocket pivots that we saw. You see this pocket pivot here, and then notice you have pocket pivot volume signature here, where it actually closes in the upper part of the range and holds the 100 level. So on that basis, I think it looks okay. And so you could take a measured position there, and if you get blown out, then you're not going to take too much of a loss. And that's kind of how I would approach it at this point. The social networking space also, you're seeing LinkedIn forming a cup, and now it's forming a handle for the first time. So you're really actually getting a pattern that you might be able to buy off of as it possibly drifts higher. Maybe it only does what these internet or .com nutty stocks in 1999 did, where they make a one-day handle or a two-day handle and then launch to the upside. And that's also a potentiality. So I'm not averse to starting to take a position here in LinkedIn just on the basis of the strength and the fact that when you pulled in, you didn't really get a lot of volume on the downside. So I don't have a problem testing a position there. I think that could actually be fruitful thing if the market continues higher. But this is a much higher risk stock. But it is nice to see the fact that it is starting to form a real base, or what looks like a real base. If you look at it on the weekly chart, let me just get this one out of the way. I know it's in here somewhere. There's my weekly chart. It does kind of come straight up off the bottom, so it would make sense for it to build a handle. But you can almost look at this as an IPO U-turn type of pattern that takes really, I would say this is a down week here. I'm not sure why it's blue. Probably because it opened down here and then closed here, so it'll be color-coded blue. But you can see it come down 1, 2, 3, 4, 5 weeks. Selling dries up around down in here. It picks up again on the upside. So my guess is if the market goes higher, you're going to see this thing punch through $100 and go higher. Maybe it does eventually test this high up here. But it seems to me that the social networking space is going to be a nascent area of, or say a fertile area of potential leadership going forward, and that could be something that drives the market. You know, I don't think a lot of people have very high expectations for the market right now. I look at one survey. Let's see if I can pull it up here on my browser. The National Association of Active Investment Managers. And you can actually get this survey from decisionpoint.com, which is a great site, I think, for getting all kinds of charts, especially sentiment charts. So let me just see if I can pull this up here for you. So here's actually, this is the, everybody can see that okay? Yeah. So you can see here what happens. The market came off a little bit. This is a weekly chart of the S&P, and here's the survey that they take. It's 40 member firms. It defines it right here. 40 NAAIM member firms who are active money managers are asked each week to provide a number which represents their overall equity exposure at the market close on Wednesday. So what you got going on here is these guys all bail out, and they run to cash pretty quickly, and so they're only about, I'm going to say, less than 30% invested here by the middle of June, roughly, the early part of June, and the market comes down. You can also see that when you do get to these lower levels of being invested in equities, that it does seem to trigger a rally. And when you've had these guys sitting in a lot of cash for a period of time, it does seem to be associated with a bottom. This is a relatively new survey, and so it's not one that we've really had a lot of time to study, and so it's really not clear. You'd like to have more longer-term data set, so to speak, so that you get a little more confirmation in terms of what sort of patterns set up over the longer term with this thing. So, right now everybody's underinvested. If the market turns to new highs, I think that you may see a lot of money managers driven into the market to play catch up, and so this may be a factor. I definitely think it's a factor in causing the rally of the last 2-3 weeks, and it could continue. So it really would not surprise me to see the market push to new highs and really screw everybody up. The market tries to fool the most people it can at any time, and I think it's doing a pretty damn good job of that right now. So, that said, I think that you could see some of these stocks come higher. But I just note, LinkedIn looks very interesting in terms of the fact that you got a nice pattern here. Could become viable here. Could be heading off for new highs. In fact, I just saw it pull down to like 92.50, so you could have picked it up right there and be up $1 already. Wow. Anyways, let me go through some of the names that we're looking at right now. I like, of course, you mentioned Biogen. We like Biogen. We picked up this pocket pivot here, and that was actually when the market was off the 200-day moving average. It's possible to buy positions sometimes when you see a pocket pivot like this, but that's tough to do. It's very tough to do. But now the stock's moving up. Look at how tight this thing is. You see the ants again. It's up 12 out of 15 days in a row or better, and so that's looking pretty powerful right now. And I bet you this stock is going to go higher, and I wouldn't be surprised to see it hit 120 if the market breaks out to new highs. And other names that I'm seeing in this area, Q-Core, Questcore, Pharmaceuticals. These guys make MS drugs, multiple sclerosis drugs. Actually, they just have one drug, whereas Biogen has a number of drugs that address multiple sclerosis, and that seems to be a hot area right now. And you see on the heels of Biogen's move, you see this smaller cap name also moving higher. This is a tough one to play, though. Dr. K, didn't you mess with this one, or are you messing with this one?
No, I've got a position in this one. I'm sitting in it. I like it.
Yeah, so it moves up and then it goes sideways and moves up. But see, a lot of this could just be the choppiness of the market. If we get a good trend going in the market, you might see this thing start to move higher a lot faster. But I think if I had to pick an MS, multiple sclerosis drug stock, I'd go with the big one. Biogen, I think, is a lot more powerful and a little more coherent, and it's a big stock, trades about 2.4 million shares a day, and looks pretty good right now. Another one that I've been keeping an eye on, let's see if I've got this written down here. Illumina, yesterday we flashed saw the stock and it flashed the pocket pivot. Stock's moving higher. I have a position in this one. I like it. I think it has potential to go a lot higher. The stock really never came off during the correction, or the June swoon, as I like to refer to it, and it looks to me like it could continue to go a fair bit higher if the market continues higher. So this is viable yesterday. Hopefully some of you got into the position and have a small position here, at least a starter position, and see where it goes. So a little bit. I have to tell you, I'm a little bit uncertain about the long side, but I've noticed in the past when I'm not that certain about it, it tends to work better than I think. I know one thing: the short side is not in play. You don't really want to be going there. Let's take a look at Netflix. Netflix yesterday was a viable gap up. Yes, Dr. K, was that a viable gap up?
Yeah, it was. It's valid.
Yeah, so now you could buy this using the low of that day, which is 275.71 yesterday, as your downside stop. Stock's holding up real tight. Today it was downgraded, I think, to neutral by somebody. But this move, if you look at this on a weekly chart, okay, this is a weekly chart of Netflix. I make it nice fat price bars for you guys so you can see them clearly. But this to me has the look of an ascending pattern. You might even say, one pullback, new high, two pullbacks, three pullbacks, and here you go. So this really, if you look at it, while the market was correcting and while you had a lot of sloppy action during June and through most of 2011, actually since February, Netflix has just kind of gone in this ascending pattern and slowly worked its way higher. And you still have about, let's see, right now I'm showing 2.1 days of short interest, so about 10 million shares, not quite. So you're still running about 20% short interest in the stock. So the shorts are persistent in Netflix. Yesterday they announced that they're going to be broadening out to South America, and they may continue to do that. I just got a new TV, by the way, a Samsung high-definition TV with 3D. It's a lot of fun. But I noticed on the remote for the TV, there's a button, a red button that says Netflix on it. So if you want to hook to Netflix right there, you just press the button and you're hooked up if you have a subscription. So even the TV makers are starting to recognize that Netflix is a force to be reckoned with, and that they include the service on the remote. So I think if someone doesn't have Netflix and they see that on their remote, then I think they're likely to buy the service. And I think that's kind of interesting and something to take note of, because people want to kind of lock or box Netflix in and say, oh, they've saturated their market, or oh, they can't grow anymore. I think the stock could go to over 300, and I'd watch it when it gets there. Maybe at the Livermore rule, century mark rule at that point, and the stock continues higher. But there's not much to complain about here. We're looking at these sort of content stocks. Interactive Corp is actually not a bad company. It's always been making money. I forget who the guy is. Who's it? Carl Icahn, who's a big investor, was. He always used to complain about the fact that you never saw IACI get the recognition that a lot of these profitless .coms did, and I remember him being on CNBC a lot complaining about that. But it looks like IACI is now, in fact, starting to get that recognition, because the stock's been in a pretty nice uptrend. Just starting to come up, if you look at a longer term, look at this thing on a longer term basis here. You're just starting to come up to this big cup. So it's really making long-term, starting to look at long-term highs here. And this most recent pattern, as I see it, does have this ascending look. One pullback, two pullbacks, and you get a pullback in here, and now you're moving out to highs. So like Netflix, another stock that didn't want to go down while the market was correcting. And I think there's a lot of upside potential here for this thing going forward. And it's one of the big plays, I think, in the content area. And as we see with Netflix, that's becoming much more critical. So we like it. I like it, at least. You like it, Dr. K?
I think this is it's an interesting creeper. I call this a creeper because if you
it's
look
a creeper.
weekly, it just it doesn't really get going. But if you look at the weekly pattern, it lo and behold, months later, it's higher and appreciably so. It's not the fastest stock out there, but it shows that it's like the turtle, you know, the turtle and the hare. It's the turtle, and it keeps going.
And some of these stocks, you know, when they're slow on the way up, and then all of a sudden they get going and they really start to move and turn parabolic. So, you know, this is one of those stocks that you normally would look at and say, this doesn't excite me. But I notice the strength is there, and for all you know, it starts to pick up some upside movement. I would even point out, you know, Illumina stock that's really, it had a nice move here, but it really has just been basing for a period of time. You have a cup with a handle, and now this flat base where you have tight closes along the 10-week line, you're breaking out now. There's another one that's really been kind of boring since the beginning of the year. Had a nice move starting in September, so you could get another leg here if you consider this to be sort of a first stage breakout when the market turned. Notice how it had this ascending pattern during the summer correction, and this could start getting going. So that's why I've got a position. We'll see how this thing works out. See if we can get back to my daily charts here. The Sequence Communications, you know, some people like to make fun of this because it's a French company, but you know, the French can do some things, right? I hope there aren't any French nationals out there that I've just offended. But you know, this company, they make chipsets for both of the new mobile platforms, WiMAX, mobile connectivity platforms. One is WiMAX, and the other one is called LTE, which stands for Long-Term Evolution, and that's supposedly the new one. But the two are kind of competing right now. These guys are in both spaces. You got the pocket pivot coming off of the lows here, and yesterday we had another pocket pivot, which we identified, and the stock's moving higher. So this looks pretty decent. At this point, though, it probably needs to build a handle. This is kind of a narrow cup, too, if you look at it. But these IPOs that are pretty hot, they can form a narrow cup and then build a handle and then go higher. So if you're in early on this one, you got in on the pocket pivots. We did mention this last week when it was coming up through here, and it's continued higher. So it actually looks pretty good. That's another one we like. I noticed today, just running some of my screens earlier, that RAX is trying to break out. This is a double bottom pattern, and you actually did form a proper double bottom where you undercut the first low with the second low, so there's your W. You're breaking out right now. Stock's coming out at the top, and again, with all these cloud names acting well, you know, not too bad here. And this one actually I would consider it. Let's see what the volume level is looking like right now. 87% above average. So, you know, right now you got a clean breakout on the stock on a double bottom base. So there you have one. There's a viable situation right now. Everybody asked about Apple. It's like, okay. I'm sure if I go back on Fox, you're going to ask me if I am willing to admit I was wrong. Well, obviously, when we got the sell signal on Apple here, it was a nice short. You undercut here, probably covering as it either undercuts and taking a profit or getting stopped out real quick at your moving averages, either the 200-day or the 50-day. Now the stock is executing a trend line breakout. If you connect all these tops here, the thing is coming out at the peak. And now, this is what I think is interesting. If you look at Apple's chart, since the middle of February, it looks a lot like the market. And just going nowhere, chopping around. You know, the market made some marginal highs in here, but Apple's really gone nowhere. Now suddenly you see the stock coming to life. And to some extent, at least as far as I'm concerned, Apple is the market as far as the NASDAQ goes. And it's possible now with Apple coming to life, you might see the market gain some upside traction. So I think this is positive. I don't think the volume is huge today. It's 17% above average right now. So, you know, for a big cap stock, that's not too bad. And I think that probably indicates that Apple could potentially break out here and continue higher. But that's what you want to see, and we remain flexible. When you go on TV, they always want to box you into, you know, are you always, you know, you're a perma bear or a perma bull? It's like nobody really understands our approach to the market, which is that you operate on the basis of what the market's telling you currently, not on your opinion or what you think is going to happen based on some deep thinking that you've done. You know, you can intellectualize about the markets all you want. You can come up with which you think are solid conclusions, but the bottom line is how things play out is all just it's entirely a different thing most of the time, and you just have to watch the price volume action of stocks. So let's see some other names I was looking at. Netgear, I bought a little bit of this, but I don't really care for today's action. Volume is up. It's kind of sloppy, so I just backed away, which means probably turn around and go to new highs. But I don't really let these things go down too far before they really rake me. It's holding right above the breakout point. It's a little bit sloppy on the day when the market's up so much, but still, it's still right there on the breakout point. But you can see it's very volatile, and that's because it's a thinner stock. I think it trades about 700,000 shares a day. Actually, I take that back. You can see right here about 500,000 shares a day. So it's puny. So that's probably one of the things that makes it less attractive to me. Let's see if we can see some other names we're looking at here. Jazz Pharmaceuticals. Here's your pocket pivot. Now, Dr. K, you never liked this because of this, but look at it's going to new highs. Are you willing to admit that you were wrong?
No, I still don't like it. I don't like any stock that does what it did. Tells me that the market makers are a bit funny with the stock. So there's a lot of other stocks out there in the universe, and I definitely don't need to play this one. In fact, if I am involved in the pharmaceutical space, or we call it the medical space, with BIIB and QCore, and there's others that I have my eye on at the moment. So that's plenty for me. I don't need to play jazz.
Yeah, I would agree. I mean, especially I think you're getting some great movement in Biogen. And look, here's how I would look at this: QCore, Biogen. Here, some of you IM me some of your favorite biotech tickers, you guys. Anybody got any? I don't see any. Somebody asking us about A. A's boring. But if to me, I'll go for the big stock any day. Okay, so in this case, Biogen is the big stock. So if the biotech space is acting well, here we go. You guys are always on top of things. That's what I like. Often more so than I am. Okay, so Biogen is the big stock. You have Menta. This one's moving higher. These guys are a competitor, I think, to Teva, and they're trying to take some of Teva's drugs. I think that's been one of the issues for the stock. It's mainly on some news. I think there's a lawsuit about whether they can come out with a generic version of one of Teva's drugs. But that one's acting well. But see, I won't want to play that. It's a $20 stock. It's cheap. Virophone, Viropharma, Virophone. What am I thinking of? Yeah, same thing here. Not as powerful as Biogen. See, so a lot of these. Let's see. Getting some more here. Copaxone, that's right. They're trying to make a generic Copaxone. Cepheid, which is an interesting name as well, and that's acting well too. But still, $30 stock, trades 421,000 shares a day. I think I'll take Biogen. It's a bigger stock and looks a lot more powerful on the upside because institutions will go there, especially in an uncertain environment, unless they're small cap managers, where they have to be weighted in small cap names. I think that the bigger stocks trading much more volume are the types of things that you want to be into. Okay, so that's kind of the moral of the story there.
Yeah, there's more reward on your side in this kind of environment where it's an uncertain, choppy, relatively trendless market. So the bigger the name, you got more institutions piling in this kind of environment where they're looking for safety. So the best of all possible worlds is a big name, in other words, a name that has a market cap, say, above $10 billion, and a name that has a high relative strength. So in other words, when the market's going higher, then you're going to be able to capitalize on that outperformance. But when the market turns lower, as it has several times this year, these are the bigger names are the kinds of names that aren't going to sell off as hard.
Right. And so you have a measure of safety there. And there's kind of an insurance policy there, and that institutions will come in and support their names when they start getting hit. So a thinner name tends to not have as good sponsorship, and hence can get whacked and knocked around a lot more. I noticed the S&P is turning red, not really a big issue. Nasdaq's still up, the Dow's still up, hanging in there. Let's see, what other names are we looking at that we like a lot here?
Well, I just got a question about Jazz. What I don't like about the chart is on April 27th of this year. Yeah, you'll see a very long tail. I remember that day, and some people had positions in this. The thing got knocked down in a matter of seconds, really.
Yeah.
and that's inappropriate action for a stock. If a stock does that on its charts, it's going to take at least, I would say, 6 months, if not a year, for me to consider the stock as tradable again.
Yeah,
Because
so
that kind of action adds that much more risk and volatility to whatever is going on behind the scenes.
Right, and I would point out, you're not likely to see that kind of thing happen with Biogen, you know. So that's our view there. Let's see. Somebody asking an interesting question here. Is there a new cloud computing ETF?
I don't think so. I don't know the cloud computing ETF. Let me check real fast again. I was asked this question about a month ago, and there certainly wasn't one, but let's see.
Somebody's saying we sound like a bar scene in a sci-fi movie. I wonder if that's an audio issue.
Oh, it says that there's a new, there is a cloud computing ETF that is going to debut. It's the ISE Cloud Computing Index Fund, SKYY, and that debuts on Wednesday, this coming Wednesday.
Okay, does that mean they would start buying some of these stocks?
Well, yeah, it says it's going to be an equal dollar-weighted index comprised of companies involved in the cloud computing industry, including both pure play and those with operations that more generally involve cloud computing. So SKYY is going to be the ticker.
Okay, that's interesting. So that comes out, is that today?
It comes out on Wednesday.
Okay, so
well, the article is written today, and they don't specify whether it's today or next Wednesday.
Looks like it's today. I'm seeing this.
Trading?
You see it? It looks like it's. Well, I don't know. I see a bar here, but I guess.
Yeah, it is. I see it. It is. It just started trading today. That's it. SKYY.
Yeah. Well, if some of the movement in the cloud stocks is being driven by this, you'll find out soon enough. But I think I would just judge these names, you know, like VMware, just on the basis of what they're doing right now and use your stops. Remember, you could have said that when they brought the silver ETF out, that any movement there was caused by the ETF, but the ETF actually can create a situation where it supports it. So I would say, it could be a positive, further positive for the names, and on that basis, could be a good thing for the stock. So I wouldn't necessarily run to any conclusion. So is everybody hearing me okay right now? I'm just curious. Yes, everybody. Getting yeses. A lot of questions. Yes, yes, yes. Okay, thanks everybody. There's a couple of people having issues. That could be a bandwidth issue. I did shut off my Bloomberg, which is a big bandwidth hog, so hopefully that will make things a little bit clearer. Sorry about that. And I think otherwise you hearing me okay, Dr. K?
Yeah, you're coming in fine.
Yeah, so it might be a combination of bandwidth issues and some other things, but there have been some issues with GoToWebinar and also the GoView system. So, but remember, we will put the recording of the webinar up as soon as we can after the live presentation, so you can always review it there. Let's see, we got TIPX. What is the volume requirement for a viable gap up? If you go onto the FAQ section of the website, it will tell you that 150% of average volume. Is that correct, Dr. K?
Right, but if it's a super cap, if it's a very heavy stock, a big cap, say, above 20 billion market cap, then it doesn't have to be quite 150%. It's in context to what the stock has done before. So if you're just basically seeing a big volume spike, and that volume spike happens to be, say, 130% of the average daily trade, that's still potentially a viable gap up.
Okay. Some names people are asking about.
Like all things, it's contextual once again.
Right. Some are asking about Agilent. I don't know. There are real buy points in here yet. It's just kind of a slower name, so that's how I look at it. Here's a question for you. On your email on 6/21, Riverbed might have a PP if it clears its largest down volume over the last 10 trading days. It just barely closed below it, and since then, it's been going higher. Well, Riverbed, we picked this off right here on this day, and this is a big reversal where you have pocket pivot volume signature here, so it's the highest. It's higher than any down volume over the prior 10 trading days, and so this is a pocket pivot off the 200-day moving average. And that seems to be pretty self-explanatory as I see it. I don't know. Dr. K, you got anything to add on this?
No, pretty much what we said. You know, that was the reversal day to the upside, and it's doing according to form.
Yeah. Somebody asked about QLIC. Stock's acting okay. It's a smaller name, but it's acting. Looks like it's acting fine. The one reason I've kind of shied away from this one is their earnings growth is just hugely negative, so negative 400%, I think, in the last quarter, and so this really doesn't appeal to us. Although the stock is doing fine, there's really no complaints there, and you're getting some big volume. That's probably on the Russell index rebalancing. So coming off the 10-day moving average, not heavy volume today. So you know, it's kind of looks okay, but not one we would play. So. Okay, get looking for some more questions. Everybody says we sound fine, so getting wah-wah effects sometimes. Uh-oh, that must be from your old man, Chris.
His spirit is with us. His physical form's in California, but his spirit is cyberspace, I suppose.
Oh, we got some news on LinkedIn here, so I actually have a position in it right here. I hope it's something really good. MFS discloses 11.9% stake in 13G filing. So Massachusetts Financial has an 11.9% stake. So you can see the stock is getting institutional sponsorship. That's a good sign to see. I remember one of the things that led me to Google back in 2004, right after they had the Dutch auction, and let's just take a look, do a little sidebar here real quick. But way back when, right here, you know, Google was in here and started to come out, and the thing that caught my eye was the fact that Fidelity had announced a 13% position, and knowing Fidelity, when they take a 13% position, that means something. MFS, I don't know that they're as high quality outfit as Fidelity, but I'm imagining if they're into an 11.9% stake in LinkedIn, then they're looking for something major here, and that's probably good for the stock. So I think it's still, you know, it's building its base here, nibbling in here, and we'll see how this goes. But I do think if the market goes higher, you're going to see the stock go higher, and it may blow some people away. So let's get down. Somebody's asking about PII. Further down the list here. Great stock. You know, I saw a piece yesterday, and somebody was, you know, a lot of guys like to, you know, they're smarter than the market and they want to outthink the market, and so, you know, they'll start getting into this whole scene of you know, the consumer durables and the consumer discretionary spending, and all those stocks are going nuts, but yet unemployment stinks, and how can this possibly be? So here's somebody intellectualizing about, you know, what the market should be doing, because consumers suppose they're weak because employment is weak, and everything is terrible, the economy is terrible, and it's probably just the rich out there buying things. So yeah, I know, I bought a TV the other day, but that's about it, you know. My daughter just turned 12, so now she's probably going to start spending money, but I don't know how that one works. But Polaris, these guys make these, what do they make? Snowmobiles, don't they? Is there some story here that we're not aware of that was exciting? Because this thing looks a lot like Biogen, actually. It's going higher. It looks good.
They don't seem to be anything in any particular, you know, exciting group, or you know, what they do seems pretty generic. But I guess they're the leader in that space.
Yeah.
I mean, the industry group itself, the products is very strong. So maybe, you know, the industry group's good, so that's probably helping the stock along as well.
Somebody asked a good question, I think, in terms of ICI, what makes the stock pop out for you? Well, what I look for, during a market correction is I look for stocks that are holding up. So I actually track, and I'm probably going to open a can of worms up with this one, but I track, on my system, I can track 3-month and 6-month relative strength. I use Wanda, and when I was at O'Neill during 2003, we noted that a lot of stocks that were coming out, like Amazon and Yahoo, had low relative strengths, and so what we started looking at was a 3-month and a 6-month relative strength, and so I can screen for that. So what I look for are stocks that are showing either this sort of fanning thing. If you graph all three, the 12-month, the 6-month, and the 3-month, you'll start to see during a correction, some of these will show a fanning type of pattern where the 3-month is moving up faster than the 6-month, which is moving faster than the 12-month, and that starts to catch my eye. So don't ask me how you can do it on your own system. Maybe MarketSmith or Daily Graphs has it. You might check on stockcharts.com, see if you can do that. But that's what I look for. And so that'll make a stock like this jump out. That'll make a stock like Biogen jump out. That'll make a stock like Netflix jump out. Because you do start to see this fanning action in the relative strength. And so in the 3-month and 6-month relative to the 12. So that will make it pop out. But visually, you can just look at a stock, and you can see when the market's coming down, is this thing breaking down, or is it showing tight action? So those are the sorts of things that you want to look for. And that's it. Now, ICI, lousy sales growth. I see the last quarter up 147% on earnings, and sales growth is 22%. In the last quarter, up 147% on earnings. So that's, for a big cap stock, 22% sales growth is fine, and actually that would fit the model just fine. So it's not that bad, really. But like Dr. K said, it's a slow stock, so it's not one that really thrills us. We want LinkedIn. That's gonna be the hot goodie here. AGP, somebody asked about. Amerigroup, insurance stock. Acting fine, so came out of a base straight up off the bottom, but it's a breakout. It looks to me like, well, it looks fine. Riverbed, part of the Russell. Okay, someone mentions, and this is a good point actually, is that this was a Russell readjustment, but to us this just shows why you can't really get bogged down too much in news, because it still goes higher. So, if you just kind of take it on the face value, a lot of stock is absorbed as a result of it going into the Russell index. So what happens is even the huge volume, even though it's attributable to a cause, it ends up absorbing a lot of the selling, and it sets up a move higher. Dr. What would your answer be on that?
Well, essentially, we had the pocket pivot. That's all I need to know. That reversal there, as you said, it is Russell rebalancing, so it's negligible. It's to be ignored. That big volume spike.
That would be my approach. So moving down the questions here. Fortinet, notice here you got your ants. Now, of course, we had the 3 pocket pivots here, so they move higher, or it's moved higher rather. And now you got ants. So you see here we're up 12 out of 50 days or better. And stock looks okay. It looks fine to me. So I would just sit with it. It might pull back to the 10-day, but if you got in here, you're just sitting. And I think this is a great name. It's one I mentioned on Stuart Varney's show yesterday morning. I like this question because I have been massively whipsawed in this market. Is it okay to feel frustrated, or is it because I am just an amateur? I think it's okay to feel frustrated. Because it has been a whipsaw market, and I think for somebody who's relatively new, it's even worse. And it's one of the reasons why I've only been trading with 1/3 of the capital that I have allocated to the stock market, because I've been whipsawed on a lot of things. This morning I blew out a Netgear. I wouldn't be surprised if this turkey turns around and goes higher, so it'll whip me out of there. But I'll stay with my other positions which are acting pretty well, and I think the big one is going to be LinkedIn, to tell you the truth. So no, it's fine. So if you feel that way, that's part of learning too. You feel pretty stupid, but even we can feel stupid at times. What is going on with precious metals? We were going to get to that, and we are going to get to that. And I will as soon as your CRR looks like PII. You're right, like Polaris, which looks like Biogen. I think it looks fine, and it's trying to break out, but no real volume. And again, here's another stock that had big volume here. That was a pocket pivot right there. But again, if you want to say, oh, that was the index rebalancing, well, stock's gone higher. And the idea here is simply that because of the rebalancing, a lot of sellers are absorbed. And so a lot of stock, once they come out, is absorbed right there. And that sets up and clears the decks for the move higher. The stock looks fine to me. It probably is going higher. If I had any reservations about it, it's that it's already had a big move, so I don't know if this is a late stage, but it definitely looks like it wants to go higher. I think their technology is used for fracking. Is that true? Yep, nice. I like this article here. Carboceramics produces ceramic proppant, a key ingredient in the secret sauce concoctions used by drillers to crack underground rock and free trapped oil and gas. So it's a fracking plant. So, you know, you can frack off with that one, I suppose. Looks good though. Can't really complain.
Yeah, that's an interesting one actually, because it's really outside the. If you look at the long-term chart on this one, it's independent of the price of oil, because it's got its own technology.
Yeah.
And it's done very well for almost a year now.
Yeah. This is the beauty of having as many subscribers as we do, and I got to thank everybody. You know, the website. Honestly, when we started the website last August, you know, some of you know I have the Gilmore Report, and the Gilmore Report is not quite 1,000 subscribers. And, you know, I thought with virtuous selfish investing, if we had a few hundred after a year, we'd be doing fine, but it's gone way beyond my expectations. And, of course, we have all of you to thank for that. But it's a lot of fun because you do come into contact with a lot of very smart people. And so an example of this is, you know, people know what's going on with PII. They bought an Indian motorcycle company. So that's got to be big, no doubt. So, and they also blew out on earnings. AIRM, that's another one that's a fracking play. So it's moving, you know, moving higher just fine. Came straight up off the bottom. I noticed yesterday New Jersey outlawed fracking. Too bad New Jersey doesn't drill for oil or gas anywhere in the state. But I guess you know, they just gotta make a statement, which I think is stupid. Here's a good question. When you were at O'Neill, did you have a training aid like the new chart arcade game? No, we didn't. We had Bill. Bill never bothered you unless he started to see some problems with your trading. He might come in and just go over your names. Or actually, I'll tell you what he would really do is when after 1999, when I was up 500 and something %, the RTK was a little ahead of me that year. You know, Bill would come around and give you your paycheck, and that was a big check for me that year, a few $1 million. You got 10% of the profits of the money that you ran for him, and here he comes in, and I'm thinking he's gonna, you know, praise me and tell me how great I am, and what he does, he tells me to pull up my wand, and we start going through charts, and he has a notepad where he's noted all my mistakes, and so we're going through all my mistakes, and he says to me, well, you know, if you had done everything right, you could have been up 1,000%, and I said to him, well, I was up 1,000% on my personal account. And he says, yeah, like I said, in your personal account, if you had done everything right, then you would have been up 2,000%. So he wasn't the kind of guy to get carried away with praise, and he always felt that even when you did very well, you could stand to learn from your mistakes rather than getting full of yourself. And that was a very good lesson at the time, and it's helped keep some perspective. But
if I'd known about pocket pivots back then, because of course when I chanced upon these, you know, in all the research I was doing earlier this decade, my God, I mean, what a massive difference to my account, because I would have been in a lot sooner, and I could have gotten on board names that I had missed the breakouts. So, I mean, I remember took 1 year as an example, and it was astonishing how much better my trading would have been every single year that I traded in the 90s. But you know, now we're facing a much more challenging environment. But what's nice is that eventually the markets will come back around, and we will see friendly years. We will see trending years like we saw back then. We just don't know when that's going to be. But when we do, I think it's going to be phenomenal. You know, knowing as much as we know now.
So what does that have to do with having a training guide or training aid at O'Neill?
O'Neill was just a great, you know, larger-than-life presence. And
Yeah,
I would
pretty
say
much.
that whenever he came into my office or whenever he called me on the phone, and when the markets were good, I'd get a phone call from him routinely once a day. And he'd always say, "What do you got for me? What names? What are you looking at? Or do you have anything that you've studied in the market that you'd like to share?" And it was always just such a natural high to connect with him on a personal basis like that, and that just spurred me on further to conduct more research studies on the market and to be competitive in terms of my own trading with myself, so I could say by the end of the year that I'm a better trader now than I was when the year began.
Yeah, I would say that he was most helpful in 1998. Was the first year I started running money for him, and by midsummer towards September, I'd drawn down like close to 70% round trip, and he came in and went over. Rather than getting upset at me and calling me names and whatnot, he sat down with me and was very serious and went through mistakes, got me on track again, and I finished that year up 82%. Thanks to the move we had in a lot of stocks, mainly Schwab, at the end of 1998. So that's how he was very helpful, and the guy's a lot of class that way. Uh, he'll put up with you for a little while and try to teach you, and you catch on. I remember at the end of the year when he did give me my check, he says, I didn't think you're going to make it there for a while, but you did come back, and that's the mark of a good trader is when you get hit, you're able to come back. Let's look at some other names. Well, Netgear, somebody's saying I'm a bit confused. The Netgear, it's too thin for me because I want something I can really move in size and really get some movement. So, bigger stocks work better for me because I run more concentrated positions. So yeah, I still think the stock looks like it's viable and it's at the top of my list, but not for my own account and not for the way I want to trade it. So that's really what I'm saying. Also, I'm not really impressed with the way Netgear is acting. Today it's getting hit on some volume on a day when the market's up pretty good, so I don't really care for any of that. So I just back away. It doesn't mean it isn't any good, but here's the other thing that you're kind of missing here, and the point that you're missing is that just because somebody or you thought something a few days ago or last week, why do you have to get into a rigid position? And if you change your position, why is that a problem? It's not. If you run some current information, in this case, Netgear getting whacked on some volume, while the rest of the market's going up. That's today, okay? So that's new information. So I just don't really like that. So I can move along to something else. And you have to be flexible in the market, And it is hard for people to let go of what they thought yesterday a lot of times, and they want to cling to that, and that just gets into more trouble. So if I had a theory about something, say on Netgear, and I'm thinking this is one of the best stocks out there, and it's at the top of my buy list, and it acts like it did today, well, maybe I'm wrong. So maybe I should just go away and rethink the situation. That's kind of where I come from. I don't persist in trying to stay with my theory. I did that in April of 2009. My theory back then was that you had to stay short financials until you saw one or two or even three of the big U.S. banks go under, and that was my theory. Okay, and as a fundamental theory, I read all the 10Ks and the financials of all the financial statements of all the financial stocks, all the banks, and my conclusion was, oh, these guys are going bankrupt. And so that was my theory, and I stuck to it a little bit too long. These things start gapping against you. So my point is, you have to pay attention to current evidence. Don't get into a situation where you have developed some well-thought-out theory, and you think you've done your homework, and you haven't because the market's telling you something else. So you have to be flexible. Finisar is toast. So I wouldn't be buying it. I wouldn't be shorting it. I think this thing worked out pretty well. Had a nice break. 40% break off of this level here. So that's when we first started coming after it. But I wouldn't touch it now with a 10-foot pole. Either way, somebody points out Bill O'Neill equals Vince Lombardi. Yeah, I would say as a guy who inspired you, as a guy who got in there and got dirty with you and made you part of the team, and was short on praise but long on criticism in the spirit of improving. I think, yeah, definitely. Thoughts on Tiffany? That's the last question we have here, and then we'll cover the metals after that. Tiffany continues higher. You had to be in here on the pocket pivot. I guess diamonds are the big thing. I've heard that some people are starting to buy diamonds as a hedge against fiat currencies, and that's a possibility. I was watching a program yesterday, and actually in Wisconsin, when Wisconsin was first settled, beaver pelts pretty much served as currency. And so maybe we should go to something like that, beaver pelts and diamonds as currency. So now let's get into the metals. I was on Stuart Barney yesterday, and he's telling me, "Oh, you like the metals? You still think they're going higher?" I still think they're going higher. I don't know if they go higher right away. We're kind of watching right now the GLD, and our view is that we will re-enter on a breakout through this level, which is about 152 on the GLD, roughly 151, 152. And that's all we're waiting for. We're not going to get fancy here. It is interesting, though, that you see today we've got silver and gold. You got gold rallying today pretty sharply. You got silver rallying. Yesterday was a big day for silver, and you have the dollar rallying. Okay, and to me, this tells you that there is something of a reallocation into into the dollar and into gold and silver as alternative currencies to the euro. If we look at the FXE, which is the euro ETF, you can see it's breaking down. So that seems to be what's going on there. And our tendency is to believe that the precious metals will go higher just on that basis. Dr. K, can you briefly just state the long-term case for precious metals?
Yeah, sure. I would say that the main bullish arguments would be the startup of QE3, also the existing Euro QE, and when we heard about Portugal today, that's just another piece of evidence that Euro QE is alive and well. There's also the other pegs to be considered that will further spur the amount of quantitative easing that goes on in Europe. There's also signs of stagflation in the sense that treasuries sold off, yet precious metals are holding their ground. And if we all remember the 70s, stagflation was predominant throughout a lot of that decade, and precious metals were the winning play for a number of years. So those are the best bullish arguments. The best bearish arguments are not as powerful. I would say that there's speculation that inflation will moderate in the second half. I think that's fairly doubtful, but let's say it does. I still think that the QE forces at play are going to trump any kind of inflation we see, or rather inflation moderation that we see in the second half. And the second factor, I guess, is the austerity measures that have been put forth by the Fed. If they stay on longer than expected, thus delaying a QE3, that could also hamper the price of precious metals.
So in summation, what we're looking for, I would look for a breakout in here. You're getting a little bit of a trend line breakout on silver, but I'd like to see it get through the 50-day moving average and possibly break out through the 38 level as a positive sign. And I would guess that you're going to see that eventually. Somebody's asking, shorting interest rates. That's not really anything we get into. I don't think you really need to go there because I don't think the profit potential is as great as it might be owning stocks. As I see it right now, with bonds getting whacked, and I do have the Barclays 20-plus year Treasury ETF up, with bonds getting whacked, I think it tells you that we're looking at potentially higher interest rates down the pike, and that may be a positive for stocks, as stocks are often an inflation hedge, and they're considered an inflation hedge. So it may be a positive for stocks on that basis, as well as the fact that higher interest rates might signal that the economy is starting to improve. We're going to get the jobs number on Friday, and I think that you might see a number that the market rallies off of. We've had some pretty bad numbers, but the market broke down, and it hasn't stayed down. So I think a lot of that news is in the market, and the market's now digesting what you're seeing coming down the pike here, and I think that could be some more positive developments. So we'll see. There are a lot of dynamics in the U.S. economy still with respect to the way the cloud is impacting everybody's life and making things more efficient. And just as we saw the PC influence the movements of the markets in the 90s and then the internet in the late 90s, early 2000s, this whole cloud thing is creating the potential for some very profitable situations to emerge. And of course, we see that with the social networking thing. And I think Zynga is coming public. Does anybody out there know when they're supposed to come public? Anybody awake out there? We've got a fair number of people on the line for a midday one. Somebody's asking about AH. Is this a pocket pivot today? No, it's way too extended from the 10-day moving average. It is showing a pocket pivot volume signature on a breakout, but no, it's not a pocket pivot. So What would it take for FTS to take a position? Well, I'd have to go to a buy signal, first of all, correct? Dr.
Well,
K?
FTS can go short as well. I mean, you can go short or long. I mean, it really, I would say that FTS is basically independent of the timing model, since the market direction model simply is its own focus on ETFs and stocks. Meanwhile, when you play the market as a market of stocks rather than a stock market, there are buys and there are shorts that can be placed. So, you know, portfolio, I would say FTS can go start going long. Yeah, we can start going long anytime, really, because we have longs in our own position, in our own portfolios.
Yeah, but we're kind of testing it. So in our view, I don't know if this is really an environment for somebody who's trying to play it slow, which is what FTS tries to do.
Yeah, FTS being conservative, it's being a conservative vehicle. It's a sketchy market. As I wrote yesterday, you know, the timing model's been staying on neutral simply because it's been a very trendless environment. What we're finally seeing is enough leading stocks are pushing their way higher, so that's pushing the model potentially into a buy signal that could come as early as, you know, the end of today. But it's still a very sketchy environment we're in. The fact that the market actually has come up off its lows as it has is, I think, due to two reasons. The first is not a very bullish reason. The first is simply because QE2 ended, Treasury sold off, the money has to go somewhere, so it's gone into the stock market. Now, that's not a very good argument for a sustained uptrend. A better argument for a sustained uptrend is that the market's telegraphing to us quantitative easing ahead, or more continued and greater quantitative easing ahead. So that is something that certainly is a viable argument, but we'll have to see in terms of price volume action in leading stocks in the days ahead.
Yeah, so, you know, probably, you know, the market is telegraphing that QE3 is going to come into play, and if that happens, you're going to see stocks go higher. But the fact that they couldn't really break it down here, and the news was just terrible, seems to argue that any incrementally positive news could send the market a lot higher and breaking out to new highs. And, you know, it wouldn't surprise me to see it go straight out to new highs and just screw everybody up because everybody's sitting back on their heels waiting for a pullback. So I think when we believe that we're in a low-risk environment for somebody who has a day job to do something besides take a couple of small positions, then we might start to move in on the portfolio simulator. So that's kind of where we are with that. So I hope that's good enough of an answer. Do you maintain, Dr. K, here's a good question. Dr. K, do you maintain your $100 price target on silver for the long term? Hell yeah.
I certainly do.
In fact, Dr. K, I meant to tell you, I haven't seen anything that, what was that 57-ounce silver bull that you ordered?
Yeah, I don't know how many ounces. I think it's like 65 ounces sculpture.
Okay.
Yeah, no, it should be coming in the next, I think in the next few weeks it should be there.
Yeah, so Dr. K, he's in London, and he ordered a 60-something ounce silver bull that he's having delivered to the office down on the beach here in Southern California, and he's going to let me have to hang out there and pick it up in the afternoon, I guess. But I think that does tell you that you are, in fact, bullish on silver, if not literally, at least figuratively, since you bought this 65-ounce silver bull. I hope you got it at a discount.
It's symbolic, I think, of a few things that, you know, we are kind of known as, well, around here, the silver bullets, because of our calls on silver and being able to play it, you know, all the way to the hilt. And also, you know, the market calls. I mean, here in London, they're a bit more conservative than they are in the U.S. And so, you know, when I've of course announced $100 an ounce silver, which just seems ludicrous, but then, you know, $50 an ounce silver also seemed ludicrous many months ago. So, you know, I think it's interesting because the silver market, or it's interesting, the art market is, in a way, you can some of these pieces of art are like stocks. Some of them will keep going up in value if you hit the right ones. And what's interesting is this is the first time I've seen a collectible where the value of the silver content in the sculpture, it's an art sculpture, so the piece, if it were made of copper, would still have, you know, artistic value. But just the silver itself, I think breaks down to about $45 an ounce in terms of just the sheer weight of silver in the sculpture. So, you know, if it goes to 100, then you can melt the sculpture and double your money.
But it sounds to me like you bought the silver at a premium.
Yeah, that's what blew me away is that I don't think people realize how much silver is worth right now, and so the value of the sculpture. I basically bought the sculpture at the prevailing price of silver when it was around 40.
I see.
Yeah, 45 an
Yeah.
ounce.
Anyways, we will. Okay, when that thing comes in, I will take a picture of it and we'll put it up on the website. Somebody's asking for that. That's I think it's Dave Eccles. Thanks for the coffee, by the way, Dave. It's great stuff. Dr. K, I just want you to know I hogged all the coffee from Kona for myself, since I know you're not a big coffee drinker.
And yet I am.
I wasn't going to reship it out to London for you, so we're working on it now. Anyways, I think that's about it. All we have for now, everybody. And if you have any other questions, feel free to email us, and we'll just see how this goes right now. But for now, it seems like the market is trying to go higher. There are some names that we're nibbling on right now, and we've gone over those and the buy spots, and that's kind of where it's at now. We'll see if this thing goes higher. But if I had to give my opinion, I think they're going to send this thing higher, and they're going to screw everybody up, and that's just what's going to happen. So on that note, you guys, thanks for showing up today, and we'll catch you next time. Take care.